be oh,
Just start
so
recording now.
if you're using a bookkeeping professional, an accountant, they should be discussing the balance sheet with you and what it means and how it ties into your business, because it is one of the other key financial reports. It's one that most definitely banks are going to ask for. Any lending institution, anything that, I mean, maybe even somebody that's going to offer a grant would want to see your balance sheet. And so I think it's important to talk about it also in the spirit of the fact that the tax deadline got pushed out for some entities. It would be a good timing to discuss this. And I want to say that last week I did bring up that if you have an S Corp, first of all, if you have an entity where you're being taxed as an S Corp, or you have a partnership, your tax filing deadline was March 15. And I was able to confirm that if you have a corporation where you're taxed as a C Corp, the tax deadline is actually in 3 days. It is still April 15. Now, for everybody else, personal tax returns, Schedule C filers, the deadline has been pushed out to May 17. So for those folks and for those that the deadline's still coming up in a couple of days, this will be a little bit more there'll be a little bit more advantage because we're trying to discuss this before that time comes up. Okay. So like I said, last week we discussed the profit and loss, and then today we're going to discuss the balance sheet. An analogy that I like to use for the balance sheet is a house, for example, because it's something a lot of homeowners are familiar with, where the house is the asset. It's the actual house, and then the liability is what you owe on it. Most of us have a mortgage on our house, and then what you've paid off from the house is your equity. It's how much equity you have on the house. And the balance sheet is precisely that for your business. It actually is a report that shows your assets, your liabilities, and your equity. It's just set up a little bit different. The formula for it, it's just a basic accounting formula that says that assets equal liability plus equity. But most of us don't think that way. Our brain, maybe because we're used to home ownership, we're more likely to understand that assets minus liability equals equity, right? So if your house was worth $300,000 and you owe $200,000 on it, then you only have $100,000 in equity. The math works out better that way for most of us. So I just wanted to explain that in the balance sheet is set up a little bit different, but it's the same thing. You can reformulate the totals to come up with the same understanding. Okay. So the top section of the balance sheet, actually, before I get into that, a balance sheet is historical up to the date that you run it to. So in this case, because this is a sample balance sheet, let's pretend this was 20, well, it has a 1 there, but let's say this was December 2020, then you're looking at the balance sheet is telling you the health of the financial health or the financial status of your company as of when it started through December 31st, 2020. So that's what that date means when you run it. So it's historical and it's giving you a picture of the financial health of your company as of that date. So if I'm running a financial a balance sheet as of December 31st, 2020, I have to understand we've had 4 months since then. So if I'm meeting with a business owner, I have to explain that, right? Like, this is the balance sheet we're looking at as of the end of year last year, because it's important to know as of when you're running it, okay? So now to get a little bit further into what the balance sheet looks like, the top section of the balance sheet is the assets. Assets is cash and cash equivalent. Okay, so some examples of cash is cash. Some examples of assets is cash, money that you have in your checking account, savings account. Actually, also accounts receivables considered an asset because you've invoiced your customers, and if they pay, it's expected that you're going to receive that money. So therefore, it's considered a cash equivalent. Inventory is another thing that's considered an asset, because if you bought a bunch of inventory for your store and say you were going to go out of business, you can sell that inventory and make money off of it. Or even if you're selling the business, you can sell that inventory to whoever's buying it. Cash equivalent. Other things that are assets, buildings, companies buy buildings, land, machinery, large machinery. Those are those fixed assets, long-term investments. Usually on the balance sheet, accounts are listed in the level of in the order of liquidity. So the quicker it becomes cash, the higher up it's listed. So obviously cash is first, checking, that's still cash, and so on. So when you're looking at a financial report, you're looking at a balance sheet, that's why things are in the order that they are. Just gonna pause for a moment. I'm hoping it did not freeze my screen. Okay. The next section in the balance sheet is.
If you're okay, while
Yes.
you pause for a moment, let's see
Mhm.
if we have any questions at all for Miss Joanna. She's already provided some great info, but before she moves on, let's see if you have any questions.
That's great.
We'll wait for a minute. And while
A
just to let you know, if you're watching us on Facebook, we would love to continue connecting with you. At this point, we will sign off of Facebook and we will continue in the Zoom area. If you're interested in finding out more about all the things we're discussing today, we will put a link in the comments area on how you can sign up for our no-cost service to continue receiving this information.
And you get the Zoom link so you can watch the extended version, right?
Yes, that's right. So see you soon. If you're interested, please register for our services. Okay, we're no longer live. Any questions at all? Feel free. You can even unmute yourselves if you want to, or place it in the chat area. No questions so far.
Okay. Then I'll move on to the next section of the balance sheet, which is your liabilities. That's things you owe. It's financial obligations. So for example, accounts payable, which is how we track bills, that is a debt because you're financially obligated to pay that out. So any loans, credit cards also belong under liabilities. So just any example of loan that you may have, line of credit, a tax bill that's not due yet, a lot of payroll liabilities that become payable, quarterly. So that's the section where those things are tracked. And then down here is the equity section, and the equity will show what the owner or owners invested, how much they withdrew from the company. So the equity section varies a lot depending on the type of entity, because if you have a partnership, then each partner would be listed separately here with their own little equity section account. If you're a corporation, there would be shareholders. If you're a single member LLC or just a sole proprietor, we say owner, right? Owner investment, owner distribution. This is an example of a balance sheet, but it actually is not showing owner disbursement. It's only showing what the owner invested in this example, but these are the things that would be listed here. One of the things I also wanted to mention about the owner's equity section is that it has a line called retained earnings. And when you're looking at this report, it will bring the total over from your income statement will be here too. Whether you had a loss or a gain for that period would be in this section as well. So as you can see, this is a very important financial report. Why your bank or lender would want to see this, because they want to know how much cash do you have, right? How much cash and cash equivalent you have, right? They want to know this. They also want to know how much debt you have, right? And then they want to know how much you've invested, how much you've drawn for the company. So this report is so important because it tells them so much. If you put yourself in the shoes of the lender, you can see why this is important. They want to know if you have this much cash, but you have this much debt, well, you have more debt than you have cash. So if I lend you money, are you going to be able to pay me back? Because you have all these other obligations, right? So this is why this is such an important financial statement. And it's not one that maybe, well, I would hope so. What I'm going to say is if you seek the services of a professional bookkeeper or an accountant, they should be discussing this with you. And if you have questions about the numbers on this report, then please ask, because it is your business and it is your financial report, and it's important that you understand it. So that's I wanted to discuss that today. And also I'll go back to the sample of the profit and loss. Remember, this report only has income and expenses. So this doesn't tell you how much you have in the bank. This report doesn't tell you how much debt you have. Because just because you have this much revenue, well, did you collect all of it? Or is this invoices that you sent out? Is that the real cash that's in the bank? Just because your net profit was $100,000 doesn't mean that your bank account has $100,000, because you probably had an opening balance in your bank account from last year. So this is just the profit and loss for the year. But when you look at the balance sheet, it may have, let's say you did collect all the money in cash, and you paid all your expenses in cash, and you earned all your income in cash, and it was paid already. You would expect that your bank account has a plus of 100,000, but that's where you see it in the other report, because this report doesn't have bank balances, doesn't have debt, doesn't have all that information. That's why both of these reports are necessary. They really are
Question.
necessary.
Yeah, I have a quick question for you. So if a business is starting out, let's just go with a somewhat of a startup, and they do not have QuickBooks, can they also do this using Excel?
Oh, yes. It'll be a little bit more difficult to build it from scratch using Excel, but I just want to mention, I can't think of an accounting software, because I don't want to just vouch for QuickBooks. That happens to be the one that I'm proficient in. I am a QuickBooks certified pro advisor. But no matter what accounting software you use, like, I worked many years in the corporate environment, and we use all kinds of accounting software that small business owners do not use. And they all produce this because it's what can I say? Assets equals liability plus equity is the foundation of accounting. So if your system cannot produce that, then it's probably not a real accounting software. I do know there are some accounting software that offer P&L only, and they don't offer the balance sheet. But I can tell you now, if you're thinking about growth, if say you're very small, you're not an S corp, you're not a corporation, you're just starting, like you mentioned, somebody that's a startup, they might not need a balance sheet yet, but if they want to get a loan later on, they're going to need to produce one, right? And that's part of growth. A lot of us, we're ready to make those kind of investment where we seek a loan or a grant. Some grant applications might be like, please include a copy of your latest balance sheet and income statement as of this date. So it's important that your software, whatever you're using, that you're creating that. Excel, probably not the best tool to have this kind of, to produce financial reports. It's not unheard of, but you would need probably the help of a professional to even create it in Excel. More than likely, you're better off using some kind of software. And there's software out there that can accommodate all sorts of costs, right? So there is QuickBooks. I often like to say their biggest competitor is Xero with an X, X-E-R-O. There's FreshBooks. There's another one that's like a step up above a spreadsheet, and it's actually free, and it's called Wave, like the ocean wave. So if you Google Wave apps, I know that one is completely free, and it's just a tad better than a spreadsheet, but it's something, it's a database, so it helps.
So now let's talk about, you're right. Now let's talk about those who have been in business for maybe a year or two, and they have not been keeping track of all of the information you talked about today. What can they do starting now?
Sure. No, listen, I will tell you, there's something that inherently, I will even admit that about myself. Procrastination is so popular, right? But there's something that kind of gives us that pressure to keep up with our finances in terms of our business, and that is taxes, because they happen every year. So if you're not keeping track of everything, then that tells me you're not filing taxes. And then the question would be, are you filing any kind of extensions, right? So that you don't, so in the event that you owe, that you don't get any kind of penalty, so that kind of keeps us honest, I would say, because it forces you to, like, at a minimum, let me get all this stuff in there. Let me track everything before taxes comes around. And unfortunately, a lot of people wait until the last minute, right? So for example, today's April 12th. I'm pretty sure there's a lot of business owners out there still scrambling, gathering everything, knowing that their tax deadline is coming up. Or there's those, like I mentioned before, the partnerships and the S corp, they had to file back in March 15. And so in that case, they get together with their tax professional, whether it's a CPA, an EA, or another kind of tax professional, and they file an extension because they want that breather, right? They get another 6 months to get this together. And so that happens a lot in the bookkeeping accounting world. We call this a cleanup, right? Sometimes it's a cleanup because the business owner started tracking it, but it's not correct. And so they hire a professional to come and clean up their books. Or they started 2 years ago, they have never filed their taxes, and they haven't done any bookkeeping whatsoever. Then that's a catch up, right? Because now you're playing catch up from the day you open up until today. And it's not wise to allow that. Now, I'm not saying that from a personal standpoint, like what it means. I want to give good advice, but also it's pretty expensive. Accounting and bookkeeping professionals charge a lot of money when you have to work on that many fiscal years together. And also the rush, right? Depends how soon you contract somebody to get this done for you. If you want it done in 3 days, that's probably going to cost you. I wanted to show you something here. I hope that you can see my screen. Can you see this tax form? Can you see this?
Yes.
Okay, awesome. So this was a Schedule C that I pulled up last time when we were talking about income statement, right? And I mentioned how the Schedule C filers, these are sole proprietors and single member LLCs. This is the tax form you file. And I wanted to point out last time how it says profit and loss in here. And so when I was saying, if you don't have any booking point whatsoever, this is a good starting point, right? To use this is the income section and the expenses. If you're like, I don't know how to track my expenses. How do I track it? What do I do? Oh, look, there's an advertising category, right? Or there's a office expense category, so it just serves as a good guide. But in terms of a Schedule C filer, there is no balance sheet in the taxes side for that, okay? But I wanted to show you that for partnerships, there is a balance sheet in the tax form, and that starts. So the first page is the income and expenses, which is like the P&L. And then over here, there's a balance sheet. And it tells you balance sheet per books, which means you should have books that has a balance sheet so that you can get your taxes done, right? So your tax professional needs that information. So this is the tax form that partnerships use. So you have to have the balance sheet. Otherwise, how are you going to get the taxes done, right? This is the form that C corporations file, the one that's due 3 days from now. Same thing. The first page starts with income and expenses, right? See, same categories, expenses, right? But then if you go down a few pages, here's the balance sheet. So when you are a partnership, a corporation, and including an S corp, this is the tax form S corp files. Same thing, begins with the income, expenses, and a few pages down is the balance sheet. So you can't get away from, not having one. It's essential. Even for tax reasons, it's essential. I will say, Lorna, that the reason I wanted to discuss about why it's important you have one, if I'm saying that all partnerships, corporation is an S corp, let me go back to the top where it shows, the name. If I'm saying that for tax reasons, S corp, regular C corp corporations and partnerships have to have a balance sheet for tax reason, then why did I decide to name this? Why it's important? Why everybody should have a balance sheet? Because Schedule C filers don't need it for tax reasons. But I want those small businesses that are sole proprietors or single member LLCs to understand that it's still important for them to have a balance sheet in their accounting system for the reasons that I mentioned earlier. The fact that if they approach a bank, they're going to ask for it, a lender. Maybe if they're applying for a grant, they may be asked for that. So that's why it's important to have a system where you can produce a balance sheet. You can run a report and produce it. It's just really important. Yeah. And also, you also want to know, you want to know how much debt you have. Sometimes, unless we gather the information, we're not aware. Even in personal finances, I know from like speaking to other people and myself, sometimes you have like 2-3 credit cards and you have a balance on each. Until you sit down and add up how much you owe on each credit card, it doesn't open your eyes. So you're like, wow, I'm carrying this much debt here, you know? And,
Yeah.
and that's what financial statements are. You know, it gives you the opportunity to analyze. It's really what it's about. It's you're analyzing how much cash and cash equivalent do I have. Honestly, when these lending institution and banks are looking at this, oh, I'm so sorry about that.
You're good.
When they're looking at this, that's what they're saying. If this business has to go out of business tomorrow, can they pay me back my loan? Well, they have all this other debt and they only have this cash. Sure, they have some inventory, but it's not enough. So I don't think this is a good company to lend money to. That's when they're looking at this, they're analyzing this information, you
That's
know,
great
so
information. Yeah.
that's what it's about. But I do know a lot of very small companies that are, you know, sole proprietors, single member LLCs. They never even look at a balance sheet. They might not be aware of it. And then they worry about it when it's time to worry about it, right?
Yeah.
When they do have the need for, like, a bank is asking me for this, I don't know what it is. So it's important that if you, whether you're doing it yourself or you're hiring a professional, that you understand that this is a very important document as well.
Yes, yes. Any questions for Ms. Linares? Feel free, you can unmute. You don't have to use a chat area. We're in Zoom now. We're not live on Facebook, so we're family. Feel free to unmute and ask any question you would like to.
I guess everybody's being shy.
Yeah.
It is a lot of information. I often get told a lot of this is like drinking water from a fire hose. If it's new, you know, you're hearing it for the first time. But that's why when I meet with business owners, I like to use analogies, things that we understand, right? And I like the house analogy because it's like, oh, if you're a homeowner, you understand liability, which is your mortgage. You understand equity. You understand that your house is your asset. In the business sense, your business is the whole thing. You want to know how much you have in assets, how much you owe. And honestly, it's something that I wouldn't even know how else to explain it other than
Yeah.
when these numbers are unique to your business, then it makes maybe a little bit more sense. But this should be something you should be reviewing monthly at a minimum, or quarterly at most. You should be reviewing your profit and loss and your balance sheet. There is another financial report called cash flow statement, which I'm not going to get into. I didn't think at this moment it would be as beneficial for tax reasons. So I decided to start with those. And I think we were playing around with some ideas about what we could cover next week.
Yeah.
And that's I wanted to talk about mileage and those kind of business tax deductions.
Yeah.
Because again, in the spirit of the fact that the tax deadline got pushed out, I wanted to focus on things that would benefit that angle.
Timing. Yeah.
Mm-hmm.
Love it. So we have no questions.
Sure.
As you mentioned, we will be tossing around some ideas on things we can discuss next week, but anything you discuss will be very important and pertinent to what they need now. So thank you so much. Thank you once again for joining us, Ms.
Let me stop sharing.
Linares of Enumerista. You have been great. Oh, and Asa, did you add your info in there? Or someone added your, Joanna Linares. Okay. It shows that someone added your information. Was it you? Oh, someone added it. So thank you. It says A added it, whoever A is. Thank you so much for adding. You're on mute. You're on mute.
That was so sweet. Thank you to whoever added that information.
Yes.
So to mention, I'm also on Facebook. And then I try to comment on when the video is posted live so that people, if they have any questions, we can keep it on the thread there.
Yeah. Perfect. Well, thank you all for joining us today. Feel free to join us next week. As you know, you can go to our website and you can register for any events that we have coming up. And every Monday for about 5 to 6 weeks, I think, Joanna, we will be talking about a lot of different topics. So thank you all for joining us today. Have a great Monday. Bye-bye.